Michael, before we get to the FOMC meeting, I just want to pick up on something that Ben Bernanke said about how the Federal Reserve's job is not to help people make money. But in effect, hasn't that really happened because the low cost of money has allowed people to go out and speculate?
Well, whether you call it speculation or others would call it investment, that was the Fed's goal. They wanted to drive up asset prices, to create a little inflation in the economy, and to create a little confidence in the markets and the economy. Ben Bernanke would argue that they have done that. It's not so much the going up that the Fed is concerned about. It's whether or not stocks are extremely volatile, whether they go down a lot. People have suggested that there is a Bernanke put, now a Yellen put, that the Fed will never let the market go too far down. They put a floor under that. He's arguing against that, saying that it's not the Fed's job to care whether you make money or not.
Well, having said that, I know that the minutes today, as we described, are going to be scrutinized for some details. What are we going to look for in terms of inflation? Because it doesn't seem to be a lot of inflation, even though they've had all this very inexpensive money flooded into the system.
Well, the line from the Fed has been that inflation will return. It's not happening right now. It's going to be low for a while, but then it's going to come back. On what do they base that? People will be looking for more details about their forecasts and how they came to the conclusions that they did. Not just inflation, but they say that the unemployment rate is going to continue to go down. Why do they see that at a time now when we're looking back at least and see some slowing in the economy, which makes this an interesting minutes, because a lot of what they would have said at the time, middle of September, no longer would hold because we got that lousy jobs report and everybody thinks the world has changed.
Yeah, or ended in some cases. So other than inflation, other than jobs, what else do you think they're going to look at? They're going to talk about China? I mean, what are they going to give us any hints about?
Well, the Fed said at the time, in September, that they did not raise rates because of events overseas. So people are going to want to read into it what they were thinking at the time the impacts would be. What was it that they were so worried about? But the real thing people are looking at, we heard from Janet Yellen at her news conference, said, we just felt that it was useful to take a pause, to step back, to wait. Others have said since then that it was a much closer decision, a very close call. So how close was it? Were they poised to raise rates for the first time and a very narrow majority decided not to? Or was there a general agreement that the economy had some problems and they needed to wait? That's kind of what people are going to be looking for the most today.